The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, folks, if you have any questions, it's 877-927-6648. Will not be able to make the commodity show tomorrow due to a previous engagement that I'm not able to change, i.e. a doctor's appointment for my annual checkup. Anyway, the main thing that I wanted to mention today, I started with the gold-silver index. As you can see, we completed the Gartley pattern on Monday. And we had an interesting situation happen last night that I have been following with the help of our friend Mr. Z in Philadelphia. We had a beautiful butterfly pattern form on the gold up at the 1346 level. And what was interesting here that was brought to my attention that we had a big divergence happening in the silver market. Silver had topped 2 days earlier, and basically what had happened is, you'll be able to see it when I post it up. You'll see the 30-minute chart on silver, and you'll notice that there was a big divergence. It was only making a 61% retracement up at the level of from where we were on Monday, whereas the gold made a new high last night about around 12:30 in the morning Eastern time. So after that happened, you can see we've had the big sell-off. So that starts the sell-off. We're already down. We've been down as much as $26 in gold from the high. So we should get down at least to the 12.95 level, I would think, over the next few days. Usually when we have a top like this that comes in, it lasts anywhere from 3 to 5 days. And then we will, gauge it from that level of where we're going, and then we'll have to see what's happening. As far as the stock market's going, we have, the NASDAQ has went up and taken out the high by 1 point from the previous level. We have not been able to do that yet in some of the other indices, but that doesn't mean, it's still early in the day, and they could certainly do that without too much trouble. There was a very, very strong astro date on the 24th of February, and these things do not have much of an orb. I mean, at the most 1 or 2 days. So if we close really strong on Friday, and remember, this is the end of the month, and we're in an up month and an up week, so it's going to be difficult for the market to be down on a Friday, would be my guess, just because these people do not get sell signals on they use long-term things, so they will not get any type of reversal signals to push the market down, in my opinion. However, if the cycle is really strong, it could also, reverse. We just don't know. We're up in this area where all these patterns are completing, and anything could happen. There is a lot of talk on the news about intervention in the silver and gold markets. Folks, I don't believe any of that stuff. That's just talk. I mean, when just remember, when people are saying this, most of them don't have any skin in the game. They don't have any trading experience. They're not trading, and they're working for somebody else. In the perfect example is Tesla. It must be a wonderful automobile because everybody wants one. The problem is they're $90,000. But the thing is that when Morgan Stanley puts out a price upgrade that it's going to go to $320 a share, people take that as gospel, and that stock's going up because it wants to go up. Remember when we were at Apple, when it was $703 a share, we had 34 people bullish on Apple with price ranges from $850 to $1,200 on Apple, back when it was $703. And down when it was $385, you couldn't get anybody to touch it. You thought it was going to go into receivership. And Apple still looks very bearish. It's had lower tops all the way through here. And it's not acting as good as the rest of the market. All those things are telling you that Apple looks like it wants to go lower. I've had a request to open the chart of Apple, and I'll be happy to do that. I hope it's the one. I'm on my finally got my new computer up and running, and we'll see where we are. I have to update it just a tiny bit here, a little more than a tiny bit, but we'll be able to see it without too much trouble here, because you certainly can see, you know, the give me 1 second, and we'll be able to put it in here. We had the huge gap, and we came down, and we've had the lower tops. I want to highlight those so that we can see them, because that's basically what we have going is the market. Oh, shucks, I hit the wrong button again, as I usually do. Now it's disappeared. So give me 1 second, and we will try to find it. Oh, don't ever give an Italian a job on a computer, folks. It's the it's just a comedy airs with me, because I just literally have a hard time trying to manipulate through this stuff without too much trouble. And now, if I can find it, oh dear, I've lost it. I've got to bring it up again, so hold on 1 second. Trying to get a monkey to wash a coconut. It's awfully difficult to do. Oh dear. Well, unfortunately, I have, this is really, well, this is ridiculous. I have to show you what my computer is showing for Apple. It's in the wrong ballpark here, so I'll just show it to you what I'm faced with. However, I think I know how to fix the problem. If you'll give me a second, if I go to one more thing here. No, we're not going to be able to see the Apple chart today. Wait a minute. Yes, we are. All I got to do. Oh, no, we're not. It just keeps going back and forth, doesn't it? Okay, let me get rid of this. Oh boy. Well, I'm not going to. I'll try to have Apple by the break. Let's not. I don't want to focus on something that I can't fix right away. Someone emailed me this morning about the price action that we're having in some of these, you know, stocks like Google and Tesla and the IBB, which is the ETF for the biotech industry. Folks, these are small segments of the market. That's not the overall market. So you have to remember that it's a market of stocks, not a stock market. So when you have these sectors, if you remember back in 2000, we had the same thing going. We had that tech bubble, you know, going crazy that, you know, no one would thought would ever stop, and it was as clear as anything on your face that if you had something like that going, that it was going to change. You know, Isaac Newton's law has never been repealed as of yet. You know, someday it might be, but, you know, right now it is not. So we'll have to see if this is going to be different this time. But in fact, I don't think that it will be. You know, we'll have to you know, wait and see, you know, where we stand on this. But now I finally got the Apple working. If you'll give me 1 second here, we can put it up here, and I'll be able to show you the fact that we've been in a really strong downtrend in Apple here for quite a few months, actually since December, and we're nearing a 61% retracement. But it looks to me like Apple wants to go to the 445 level. That would set up a bullish Gartley pattern at that point, and then I would be interested in you know, taking a look at it from the long side, but not until that time, because that would get you right down to right around the 450 level, and then I would take a look at it. However, it might hold this level where we are right now, but my assumption is no, because the fact that it's a much weaker than market stock, and it's in a much stronger downtrend than the rest of the stocks. We've been, you know, going down since you know, early December. This market topped long before the rest of the stock market did. So who knows? Someone asked the question whether Newton's laws are related to the global warming. Well, you'd have to tell the people in the eastern United States about global warming, because they haven't heard about that for the past month. They've been in a massive deep freeze, you know, back in that area. So this is you know, primarily what we're facing here in Arizona. We don't have to worry too much about global warming for another 30 days. And then we have the annual contest here in Tucson is when is the first day when we hit 100 degrees, and that usually happens around the end of April. So we'll see if it's going to do that this year or not. Now the next the next index that I wanted to look at, which is the overall the New York Stock Exchange Index. This is the one that we put so much of our emphasis on, and we've made a slightly higher high by just a matter of a few pennies from what we made back on December 31st when we had the new moon, and we've got I believe we have a new moon coming in on Friday, and we also have Mercury goes off of retrograde motion at that time. It goes to direct motion, so that would be that should be a really significant time coming in either on Friday. Well, it is Friday's the day, but it could extend out all the way into Monday. So we still have that working. The emphasis of that February 24th date is very important because it has a lot of cycles that come together at that time that make it very, very important from a cyclical analyst point of view. I have a question about Martin Armstrong from Armstrong Economics has put out a warning about the Ides of March, that he's expecting something really dramatic to happen in the month of March, and I certainly agree with that. I think it's going to happen at any time. We're going to have volatility here, folks. It's going to shake your belief in some of these things, because we're in a situation where we have a huge amount of things happening all at the same time, and they're being pulled by what's ever going to happen to us on the 21st to 22nd of April. That's the mother of all. That's the mother of all cycles. So we're going to see whether that's going to be pulled up or down, but it's something really big at that point. It is very similar to what happened on August the 15th of 2007. If you'll remember, that's where we had the low, and then we went off from August. We went up into October, and then that was it. It was all over. It's that type of cycle. We're going to see what it's going to be doing at that time, but it is a very, very important cycle and very, very huge. So we've got to watch it very closely. The Bradley model has we have not taken out the highs yet in the Dow Jones Industrial Average. The Dow Jones has just made a 786 retracement. We made a 786 retracement with the New York Stock Exchange Index. We made a 786 retracement on the Dow futures to the exact point. I'll put that up into the room. But on the Dow Jones actual index itself, we actually missed that by just a few pennies. It was off by I think maybe 40 or 50 Dow points. But we did in fact make that absolutely perfectly on the Dow Jones. I'm trying to get this put in here so we can see it. I'll post it in here so you'll be able to see it. It made it to the exact Dow point on the 24th, and so far we've rallied back to the 786 of that high, but it's still very early in the day, and we could very easily turn around and make new highs. And if we did, it'll set up another swing up to another 300 or 400 points in the Dow possibly. Okay, that's it, folks. We'll be back in a little bit. We got the Dow up 47, gold down 20.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, we're going to take a look at American Barrick. We were looking at this stock, as you remember, when it was down trading around the 15 level. We had a perfect squaring of price and time. That basically means that from the AB point to the CD point is perfect in both price and time. In other words, the amount of time that it comes down is perfectly equal to the price that it came down to. We don't always get those lined up like that, but this one was pretty much spot on at the 15-something per level, around 1550 as I recall. And now we've had a move of well over 30% here in a matter of just a few months, and we've reached a very important ABCD point on the upside, as we showed with the gold-silver index that we pointed out. So the next question that our listener was asking is, where would you look to re-enter the American Barrick? Well, if you take the low that we made down around 15, and the high we made yesterday around 21.5, that's 6.5 points. All you have to do is to multiply that by 0.618. So if you multiply 618 by 618 into 61, you're going to get around $4. So if you subtract $4 from the 21.50, right around $7.50 is where you'd want to be looking to buy American Barrick, and that's $3 from where it is now. So that would be the spot that I would, if you have a really strong interest in American Barrick, which we follow that one because it's one of the it is the largest one. But I'll put that fib point in there, and you'll be able to see it. And it was all I did was did the calculations in my head, but you'll be able to see it on the Tiger Den when I put it in. You'll see that around 1775, 1750 is where we're going to be coming into a 61% retracement. And that should take several weeks to get to that point if it's correct. We've made some type of a pretty strong high here in gold. The fib point that we were looking at from the high that we made back at 1440 in gold came in at 1339. We got as high as 1346 last night when we made that little butterfly pattern on the 5-minute chart. And now we are looking at the market as far as coming into an area where it should come down. And we're thinking around 1297 to 1285 in the gold as the first support. Now, if it gets there too quickly, it'll most probably go a lot below that. Okay, we got our first caller in. Brent, are you there?
Yes, I am, Larry. How are you today?
I'm very good. Brent, if we're going to be coming up to the break here in just a second, so if we come up to the break, stay with us because I'm sure we're not going to be able to, finish everything at the same time. So just stay with us. What was your question, my friend?
I wanted your analysis on the UNG. I'm decent at doing charts, nothing like you, but do you consider when we came off this top recently an A to B leg or a B to C?
That was one that we talked about last week. I guess you were not on the air, but we had a $16,000 move in natural gas in 9 hours yesterday. I don't know if you're aware of that or not, but I will post the. I think a blind man could see this 3-drive to a top pattern in the UNG. It was just absolutely perfect. It was also a symmetrical triangle. The 135 symmetrical triangle. And it's already corrected just about in just a few days. It's down well over 10%. I'm expecting a little bit of support to come in around the 24.25 level, which is about $1 away from where it is now. But it looks to me we could have made a major top in here where we could come all the way down to $20 without any trouble at all in this.
Okay, that's what I'm hoping for. I have puts on it, so.
Well, that's what hoping. That's not a very good. That's not a very good trading trading thing. But Brent, what you should do is take a look at the chart for UNZ that we put into the Tiger TV, because if you'll look at the time between June and April, we made another 3-drive pattern, very similar, but only spread out much longer. And then that's what happened to us now. But we had this straight up move, which was mainly due to weather related. At least that's what they're telling us. But the move that we had in natural gas yesterday was something that you just unbelievable. Once we hit $6.48 per cubic feet, we went all the way down to $4.48 per cubic feet today, and it goes off expiration today because it's the last trading day. That's $18,000 in a matter of 24 hours. That's one of the more dramatic moves we've had in commodities. For quite some time over a 1 or 2 day period. So that was
huge.
Yeah, it sure was. Listen, thank you for calling in, my friend.
Can I ask you another question before?
Stay with us. We got to take the break, my friend. We got the Dow up about 50, and we're going to take a little break here.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex.
Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back with our friend Brent from California. Brent, are you still there?
Yes, I am, Larry.
Yes, sir. What's your second question?
My question was about the commodity futures.
Sure.
I've been following the gold futures and the natural gas for quite a while, but just recently started following the sugar futures. Is there a reason that those don't trade in the same time frame? It seems like they don't trade. The gold and the natural gas seem to trade longer. The sugar
yes, they don't do. They don't do overnight trading in electronic trading. I don't believe in the sugar. I only trade it a couple times a year, and I know it's had a big breakout. But frankly, I have not. I haven't followed it that much as far as electronic trading. It's really very thinly traded compared to the other markets. So my guess is that it's just that's basically the difference. And first of all, the volume in it is very, very small compared to the rest of the markets.
And so the ones that are just more major commodities, they trade those.
Yeah, they trade the ones that are, they trade the international. See, sugar is an international commodity, of course, because they call it world number 11 sugar, but it's not nearly the volatility or the demand or anything that we have with, demand with the gold and the currencies and stuff like that. Even silver in electronic trading is very difficult because of the bid and ask in some of these things. When the market moves really fast, can really take you to the cleaners. They can take 30 cents from you away from silver in a matter of seconds, which is $1,500, and you don't like to expose yourself. Gold, you don't have that problem because there's a lot more volume and volatility in it. But you've got to be careful about liquidity in some of these markets. But sugar, I'm almost, I'll have to ask Rich Anderson, of course, but I'm almost sure that it does not trade electronically. That's my guess. It's had a pretty good run here off the bottom, but it's still basically bearish. It's just having a, tremendous short covering rally with the drought that they're having all across the parts of Europe and of course, South America also. So, but that's all weather related is my guess.
Okay, well, I really appreciate it, Larry. That gives me some insight. I was just trying to figure it out. So.
Okay, Martinez, California. That's up north of San Francisco, isn't it?
It's kind of east of San Francisco. It's I'm sure you know John Muir. That's where he lived for part of his life.
Oh, sure, yeah. Is it a cattle country?
It was just like most of California before it was developed was all orchards and all agricultural, but it's obviously changed. So it has there is water nearby. There's the Carquinez Straits that are kind of it comes off it flows into the San Francisco Bay essentially. So.
Okay. Well, thanks for calling in, my friend. I always appreciate your calls.
All right, you take care, Larry. Have a good day.
Okay, you bet. If you have any questions, it's 877-927-6648. And we had a question about Arch Crawford, our good friend here in Tucson. He is very bearish. He's talking about these aspects that are happening in April 21st and 22nd. It's something like a Grand Cross. I don't do the same thing that he does, but it is a huge date. This will be something that will be, I will go on record as saying on April 21st or 22nd, there's going to be something that is so dramatic. I don't know if it's going to be in the markets. It might be something else. It could be a geopolitical event. It could be something geophysical, something like an earthquake or something like that. But on the 21st or 22nd of April, we're going to see the headlines all across the world on almost all the papers and news events that something huge is going to happen. I haven't said that except one other time in my history of looking at astral cycles, and that was back in November of 1989. And I basically told my subscribers at that time that if that event didn't hit every major newspaper in the world, that they would get a free years of my Astro Cycles newsletter, and it was the breaking of the Berlin Wall. It came down on that day. I believe it was November 9th, 1989, as history serves it. Didn't do anything to the markets. Stock markets didn't do anything, but it was a huge day, and it was the largest event of that decade. So we'll see if it's going to have anything, but it's going to be big, folks. That's a big event that's happening on April 21st and 22nd. This weekend I'll be speaking in Denver at the Denver Trading Group on Saturday morning. I'll be able to visit in the afternoon with Dr. Al Larson, the gentleman who wrote, he's wrote several books, but he wrote the book about the moon cycles that is very, very good. And for I just cannot think of it right now. Somebody will remind me in just a second. But he's one of the three smartest men I've ever met in my life. And it'll be very interesting to he's got some interesting new research that he wants to share with me. And I'm certainly will be interested to see what he said. He's one smart cookie. He has double PhDs. He has a double PhD in physics, and he has another PhD in computer engineering. So he is he really knows his stuff, and he loves trading, and he's quite good at it too. So it'll be fun to see what he has to tell us. Okay, the next thing I wanted to show you folks is that we have had a very interesting pattern form here over the past several weeks in our Treasury notes. We've gone up to the we've had a drop in rates. In other words, notes have gone up. That means rates have dropped, and now it looks like rates are getting ready to start to to go up again. That means that we're looking at the market to come down at least a half a basis point on the 10-year notes that I've just posted. Now, if we take a look at the Treasury bonds, and they go back a little farther, they go back almost a month. You'll see that we've also completed a 61% retracement in the Treasury bonds up at that 133 level. Now, remember, this market has been in a bear market for a year and a half. We've been looking at higher rates staring us. Now, the Fed hasn't given us higher interest rates. well, they've given us higher interest rates. They haven't given them to the banks. That's the problem. The banks are the ones that, get to take advantage of all this. We've had mortgage rates on the 30-year mortgage have gone up 25% from 3.5 to 4.5, which is, anybody that's buying a house is paying a little up on it, but still 4.5 is a lot cheaper than it was with the average rate of around 6.5 for a mortgage. So these are the things that we're keeping an eye on right now in the interest rate market. But if we go below that 130 level in the Treasury bonds, the 30-year bond, that really sets up for some really dramatic move. Now, I would like to mention here, there's a lot of talk about on the internet. You see these dramatic correlations that they have between the Nikkei Dow when it was topped on December 31st, 1989, what it did over the next 40 days and where we are now in the stock market. All of that is possible to do, but I don't look at those types of correlations. I like to see them to see if they do follow along, but they're calling for something really big to happen. Now, crashes don't sneak up on you, folks. They've already started to move in the direction. Somebody ahead of time knows that something really bad is going to happen. They're certainly not going to tell us, but they can't hide from us. So if the market does start to move down, watch for that. Watch for the market closing down badly several days in a row if it should ever happen. I don't know if it ever will because it is different this time, but if that happens, start to watch for that. And the second thing you want to watch if something dramatic is going to happen are watch the spreads in the currencies. And if you're trading stocks, you should follow the currency markets. You don't have to follow them all. You could just follow the euro and the yen, and just euro U.S. dollar and yen U.S. dollar, and that would tell us that you would be looking at wide spreads. In other words, the spread now in the euro is 1 or 2 pips. Well, if that spread moves out to 5 or 10 or even 20, then look out. Then you know that something is really big. That means money is scared and is starting to move, and that's when you're going to see the proverbial stuff hit the fan. Whether that happens or not, I don't know, but everything is set up for it. The timing astrological is certainly correct. The patterns are certainly correct. I mean, we're still completing, a massive 135 expanding triangle in the NASDAQ and in the New York Stock Exchange Index. The New York Stock Exchange Index took the high out by the previous month by I think it was 10 cents, and that's with a $10,400 handle. So that's basically, the same level. Now we could certainly, close strongly above that and blow up to the upside, which is certainly possible. But we're in the zone now, and we have been for several weeks that this could happen. Someone asked me the question, how did I do during 1987? 1987 was really a really great year because the Bradley model, and I've posted this several times, had the top picked right on the money. That was the harmonic convergence day. We had many aspects occurring, all of them conjunctions at the same time, and they were all in the sign of Leo, which is the bull, and the roaring lion. And so it was really an easy call to make. And then the market broke badly after that. And actually the crash happened to be, in retrospect, if you went back and looked, the greatest buying opportunity of the 1980s, because the market bottomed in 1982 on August the 9th, and then it ran up until August the 25th of 1987, and then we came down and made the low on October 20th. We made a slightly lower low than we did on the 19th, and that came in at exactly 0.618 to the tick of the low in the Dow Jones Industrial Average, I believe at around 1666. It was right near the Devil's Advocate. And from there, we went up to, we went multiplied by 10. We went to 16,000 and change so far, and we're not finished yet possibly. So that's what we're looking at. But these will happen again. The question is the timing of them is rather difficult sometime. It will be different this time, I promise you that, because it'll be a lot worse than most people think. That's my guess. So we'll see. Back in those days, we had interest rates were quite high, so it was very easy for the Fed to lower interest rates at that time. And by then, Volcker had broken the back of inflation. At least that's what they did. Basically, what they did with inflation is they just changed the way that they that they cover it. I mean, they take out food and energy. Well, nobody uses food or energy, do they? No, and I don't know. I don't know why they didn't take out housing too, because nobody uses, food, energy, or housing. The things that they bring in are things like that go down in price. But if you look at the price of milk, the price of milk is up 33% over a year, and the price of beef now, if you already know what that's doing. If you ever go out and buy a McDonald's hamburger, it used to be $3.36 for a McDonald's Big Mac, and now it's $4.42. Yeah, that same hamburger in Sweden will cost, in Switzerland, either Geneva or Zurich will cost you well over $16 for a Big Mac in Switzerland. So you can see the differences in the inflating prices that we have across the world. But it's the way they do it. They do the same thing with unemployment, folks. They're telling us that our unemployment rate is down below 7%, and what they do is the people that can't get work, they don't count them anymore. If they can't get a job, they're not unemployed, so they're just not going to be counted. So that's the way they do it. It's the old thing of that's how you get a frog. You put a frog in boiling water, and he never knows he's in boiling water until it's too late. So that's probably, what's happening. But we are looking at higher interest rates down the road. I don't think there's any question about that. That's at least the way it looks like from my perspective. And, whether that's going to be the case or not, we'll have to wait and see. We're going to take a look here at a couple of currencies here because we have some very big things happening in the Japanese yen and also in the euro, because they've been in really tight trading ranges here for quite some time in the yen. And, in fact, we've been in the trading range for almost 2.5 weeks now in the Japanese yen, which is very, very unusual. We've only made after we made the top, we've only made a 38% retracement from the high that we made. And so it's just been in a real tight trading range here, but it still could get up to the 103 and change level. But I'll put this in when we come. Well, I'll do it right now since we'll be able to see it. I'll put the Japanese yen daily in, and you'll see. And this yen trade follows exactly what's happening with the Nikkei. I mean, it's almost tick for tick. It bottomed back on February 3rd, and since that time we've been in it's been 3 weeks, and it's been in a really tight trading range here since February 3rd between 101 and 103. And we're at the upper end of that range right now, as we should be, with stocks making a new high. So that's what we're looking at. Okay, the next currency that I wanted to focus on here is the euro, because that's the number one currency. When you use it with the U.S. dollar, it is 53% of the dollar index. I will say this: if we ever get that dollar index below 78, it's trading at 80.5 right now. But if we ever get that index below the 78 level, you're going to be seeing something really, really dramatic happening. Okay, we got the Dow up about 50, gold down $16, and the rest of the market is pretty much up.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Carol Martin here on TFNN.
Okay, folks, I'm going to wrap up the show here with the chart of the euro. I've put the weekly chart in versus the U.S. dollar, and the main reason is that it goes back to 2008 and shows, the trend has been down. We've gone from 160 all the way down to 120, then rallied up to 140. We've had three major highs through here. All of them have been lower than the previous high, and if you'll look at the high that we made back in 2008, right before the big financial collapse, you'll notice that it made a beautiful ABCD pattern, which made a slightly higher high by just a matter of about 20 pips back in 2008 in early May, and from that level it went from 160, all the way down. The next 5 months it went all the way down to the 122 level. So the key to watch on these markets is I watch the patterns, of course, because the patterns, they don't, lead you astray very often. When you got markets like Google and Tesla and the IBB, I mean, when they gap up like that and stuff, and they're running, they're in a zone all by yourself, and unless you're long, it's really hard, to determine, what the next price objective is going to be. The euro, on the other hand, you don't have that kind of stuff. I mean, they don't come out with a buy recommendation in the euro. I mean, they might, but no one ever hears about it. But this market has had lower tops, and just in the last 4 or 5 months, we've had lower tops. And so this sets up, lower prices in the euro, which means higher prices in the dollar. And my hat's still off to Tom O'Brien, because back in 2010, he came out with King Dollar when the dollar was trading around 72. And, of course, the dollar went all the way up to 85. So he had that spot on. And so far, it doesn't look like that has changed very much. The dollar still looks pretty strong, and it should be able to, go higher from this level. And that means lower prices in the euro and lower prices in the pound. The euro is 53% of the dollar index, which is an index of, there's about 26 different currencies in it. The top 6 of the majors, which is the yen, the euro, the pound, the Australian dollar, all of those are, heavily weighted. So if you take the first 6 or 8 of the major currencies, you're going to have about 80% of the dollar index. So watch the euro and the pound and the yen and the Australian dollar, and that'll give you a pretty good idea. If you see something really weird happen, like, big strength or big weakness, money moves, folks. Remember the movie with Robert Redford and Dustin Hoffman about the Watergate scandal? It was, the key to that was follow the money, and that's what happens in the Forex markets. It's follow the money because, they can run from you and they can give you misinformation, but they can't hide from you. If prices are going up, there's more buyers. If prices are going down, there's more sellers. That's pretty much the bottom line of what we're looking at here. I would like to mention on this last run-up that we had in silver and gold, we had very little information from the open interest and volume. There was really very little there, a little bit of short covering, and a tiny bit of new buying, but basically it was a scratch. And but we're in a correction now, no question about that. We're going to see where our first bottom comes in here in gold. My assumption is be somewhere around the 1285 level. That's what we're looking at. It should take at least 3 or 4 days to get there, but we've moved $30 in the first. Actually, more than that. Yeah, we moved $30 the first day, so we could very easily get to that in a certain place here. We got the Dow Jones up about 56 right now, and the S&P's up a couple. The NASDAQ is up a little bit in here, and that's about it. Live every day in an attitude of gratitude, and may God bless.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
You're watching Tiger TV.